Hello everyone, welcome to my second day of live stream for the ACCA revision. It's a last minute revision that I focus on exam technique as well as you have a chance to ask me some Q&A. How are you, ladies and gentlemen? A very good evening. So if you are here, say hi to me, ladies and gentlemen. I want to see who are here. So I have 12 people watching my live stream today. Okay, it is lesser than yesterday, but understandable because AAA is an optional paper, and a lot of students they might be afraid of this paper, but it's okay. If you are here, just drop hi and let me know you are here. I see Queenie. Hello, Queenie. Yesterday you are here, today you are here. Thank you very much. I also see Ming Seng. Hi, Ming Seng. Welcome. All right. I hope that my voice and everything is okay. Right. Yes. Hello, Kemi, my student. Hi. Welcome. Hello, Honey. Also my student. Welcome. All right. So yes. Oh, Whitney is here also. Hi, Whitney. Yes. So to those of you who are sitting for exam, I want to wish you first good luck, all the best. Yeah, Davina is here. Hello, Davina. Hello. Yes, I want to wish you all the best. So right. Who else is here? I see Chris. Oh, my sound is good and clear. All right. Thank you very much. Thank you. Yeah. All right. Hi. Okay, ladies and gentlemen. So yes. I just want to do a quick survey lah. I just want to see how many of you are taking the AAA exam this March, which means next Monday. If you are taking the March exam, can you type 111 in the comment section? Let me know if you are sitting for the AAA exam. I just want to see roughly how many of you here are sitting for this exam. While I get ready to share my screen to all of you. All right, I need to share a screen to all of you. You type 111 while waiting for me to share. All right. Yes. Okay. I think the screen sharing works. That's good. Okay. Yes. I saw that. Yeah. Ming Seng is taking. Whitney is taking. Kemi is taking. Honey is taking. Takut, huh? Okay. No need takut. The session today is to give you some confidence. I just want to re-emphasize on certain important point that you have to remember. So if you can remember this point, and when you go to exam, you try your best to write, it shouldn't be a problem. Brooke is also taking the exam. Huh? Yeah. Okay. No problem. All right, ladies and gentlemen, so let us begin. All right, let us begin. So first of all, let us do a quick recap. Okay, let us do a quick recap on what is this exam called AAA and why is it difficult? All right, why is it difficult? Now, this is of course a challenging paper, but is it impossible to pass? I'll tell you, of course not. You can pass this paper. I mean, my previous student can pass this paper, so can you, right? So the reason why I'm here today is I want to share with you, like some of the key errors that students make, and I'm going to refer to this past year, the September-December 2021 past year paper. I'm focusing on question 1 and question 3. I don't think I have the time to talk about question 2, but it's okay because I'll tell you later. When you study for this paper, right? Question 1 and this one of the question here at from 2 and 3, right, is the question that you should focus on, and you should aim to score really high marks from this question. Then your other question, right, in case if something happened you don't know how to do, you still have some allowance for not being able to write that well lah. But anyway, AAA exam contains section A and section B. Section A is a 50 marks question where you need to write 46 marks, and 4 marks is for professional mark. Okay, just for your information, if you are sitting for the AAA exam if you are sitting for AAA exam after June, there will be a change in the format where there is not 4 marks professional marks anymore, but the professional mark for the entire AAA paper becomes 20 marks. That will be a major change in the exam format starting from June. After the June exam, which means this year September, it will be the first time the AAA exam changed the format. But it doesn't affect you. Don't worry, it doesn't affect you. So if you are affected by this, you can let me know, because I think in the future I'm going to do a live stream to talk about the new format as well. Don't worry about that. I can give you some guidance about that. But we are going to focus on the existing format now, which is the 46 marks. Now, this 46 marks is predominantly the examiner said that it is predominantly the planning stage of the audit, which means in the question 1, the auditor is still planning for the audit, and you need to know where you are in the stages of your audit. The reason is because if you don't know where you are, you can get the answer wrong. So I'm going to show you later through the past year paper, how do you know where you are? Because exactly at where you are, you need to do different thing. Like in the planning stage, what do we need to do? In the planning stage, we need to assess the audit risk. We need to find out what is the risk of material misstatement. We need to see if there's any detection risk. We need to plan how are we going to audit certain issue. That is called planning stage. Now, section B is having two questions. So you have question 2 and question 3. Each one of them are 25 marks. What we know is one question is about a completion. One question is about completion and reporting, which means at the end of the audit, right, what should the auditor do? Now, this part covers a few areas such as subsequent event. Okay, you can expect to get question maybe on subsequent event. You can get question on going concern. You may also get question on review. Okay, maybe you are at the review stage, you want to review it. You may also get a question on, audit report, as well as audit opinion. Now, these are the topic that is in this question. So it's quite fixed, the examiner has already mentioned, which means, right, if you want certainty, if you want to ask me, hey, AAA exam, can we predict? This is the prediction. So if I were you, right, because now it's only a few days before the exam. So I don't want you to study any new knowledge. Perhaps you may want to just review the past year answer, the past year paper and the question and the answer. Maybe you look at how the question on completion and reporting is being asked. Maybe you look at how the question of planning stage is asked. You aim to score very high mark for these two. And then the other question, right? Sadly, we cannot spot because the examiner just say this one can be examined from any syllabus area, any areas. So we can't really predict what will come out. Sometimes you get questions like prospective financial information. Sometimes you get questions on fraud investigation. Sometimes you get questions on money laundering. There are a lot. So my advice to students is always you try your best to answer the first question and the second question that involve audit reporting. If you can answer these two questions well, you are very close to passing already. But can you skip the last question? Ladies and gentlemen, let me tell you this one and you remember this. You do not skip any question in this exam. It is very dangerous. You must answer all the question. You must answer all the question. You cannot be like, because I tell you, you focus on the audit risk question and the completion question. This one, I just give up, like I leave empty. No, you don't do that. Because if you write something, you might get some marks. So I don't want you to leave this empty. I have students, sadly, they fail. Not they fail badly, but they fail at 40 plus. Some maybe 49 or 48 because of what? Maybe it's because they don't answer the question enough. If they can spend maybe 1 or 2 minutes to write a bit more, maybe they pass already. So, ladies and gentlemen, the first thing you have to know is time management. Okay, the very first thing that you have to know is how do you make sure you can answer all the questions? Time management is extremely crucial in this paper. Without a good time management, you cannot finish this paper. So how do you manage your time? Later on, I'm going to demonstrate to you how will I approach the question. You can consider to use the exam technique that I share. It will help you to save some time. The trick is, ladies and gentlemen, by the way, when you are listening to me, I don't want you to just listen passively. You should be actively taking notes. There should be some notebook in front of you or a piece of paper, and you must have a pen in front of you. Write down some of the key things that you feel which is important. Then only you can remember. Otherwise, by the end of this 1.5 hour or 2 hours, I may extend to 2 hours. You may forget what I want to tell you. So make sure you jot down the notes. Okay. The trick is you need to plan your answer. You need to plan your answer in the word processing. This is a key. You have to plan your answer as you read. If you want to have enough time, this is extremely important. When you read the question, you don't just read, you don't just read read storybook. It is 1st of July, blah, blah, blah. When you finish, you also don't know what you're reading. Don't do that. I want you, when you read, you have to plan your answer already. Which means, ladies and gentlemen, when you read the case, make sure you read the requirement first. Make sure you know exactly what the question is asking you about. You have to read the requirement first. If you don't read the requirement, your reading becomes pointless. It becomes directionless. We don't want that to happen. So you have to read the requirement first. And then as you read the requirement, you have to, then you have a mental point idea. What is going to be asked? And then when you read the question, you look out for the answer. If you think that you can use it there, you type the point form. You plan it, you type the point form in your word processing. Trust me, ladies and gentlemen, my student who follow this advice told me the time that they take to answer the question is being cut short significantly. They can really write more. So it is a proven way. You can follow this method. All right, you can follow this method. Okay, so before I demonstrate this to you, you should also know that it is important for you to revise SBR standard, at least briefly, at least get the main point, at least the main point. I'm not asking you to take out SBR textbook and you go through the textbook. Impossible. No one has the time to do that. But at least maybe, you know, online you have some very short notes, or maybe your teacher even give you some short notes. Read through that. At least you refresh your memory, before you go to the exam hall. It will help you because SBR standard is definitely examinable in this paper. So how do you I mean, if you have no choice, if you want to take this paper, this is something that you have to go through. I know SBR standard, there are a lot, and to remember it, you already suffer so much in SBR exam. Why would you want to suffer in AAA? But don't worry, if you can do this well, your skills, right? If you go to audit firm in the future, the auditor, the audit manager, they will like you because you become a person that really knows how to utilize or apply the standard to solve auditing issue. So as such, I want to stress this. Application is extremely important in this exam. No marks will be given if you just list down the standard and you don't apply. You believe me, if you just list down the standard, for example, you say, IAS 38, development cost mentioned that to capitalize development cost, then you list down all the criteria. You think that has marks? If you don't apply, there's no marks. Only if you apply to the case. Apply to the case. It must refer to the case. Your answer, you must write something that shows that you are referring to the case. Now, how do you refer to the case then? I'll show you later. I'll show you. The trick is you have to copy some information from the case and you comment a bit about that. It's just that you have to comment a bit about that. Then you will be able to apply and refer to the case already. So similarly, you don't go and, like, for example, ethics question. You don't go and say, this is self-review, strat, full stop. This is self-interest, full stop. You don't get any marks by just listing out the name. You have to explain, you have to explain. This paper is about explain, explain, and explain. So you have to find ways to elaborate your answer. Now, ladies and gentlemen, are you still with me so far? If you're still with me so far, you type 111 once again. Okay, 111 to let me know you are still with me, because these are very key. You have to get the mindset right first before you sit for this exam. So 111, type in the comment section. Let me know you understand what I'm trying to tell you. 111. Okay, ladies and gentlemen, let me know. 111 is extremely important that you plan your answer as you read. It is very important for you to read the requirement carefully, apply SBR standard, apply, and apply. All right, yes, I can see that you understand. That's very good. Okay, now let's, ladies and gentlemen, let us go and we have a look at the question. Okay, I'm going to focus on, as I told you, question 1, okay, question 1 and question 3, okay, of the September-December exam. So I'm going to use the computer-based exam, which is available in the ACCA website to illustrate to you. All right, so let me just go through this instruction. Okay, yeah, it's here. So everyone, you see, the requirement for the first question is always the same. It's always the same for this format. You have to respond to the instruction in the email. Okay, and professional marks are awarded. Now, professional marks, right, is very easy to get 3 out of 4. Okay, as I type the answer later, because I'm going to show you some example. I cannot type everything, the time is too short, but I will tell you certain things in which the examiner will look out for, and you can easily get that 3 marks. It's very easy. You must get these 3 marks. So I'll tell you in a short while. Okay, so before you read the exhibit, right, you have to read this part first. All right, you have to read this part first. I'll always tell students you read this part. Then later on, you will read the partner's email and you focus on the, you are going to focus on the, what is that? Let me just, okay. Let me just, yeah. Okay, then you have to focus on the requirement here later. So let us read the case. You see, your AAA exam, it is always like this. It is always starting from, it is 1st of July 20X5. So similar to the AA, if you are here with me yesterday, I told my student, it is 1st of July. So 1st of July, then you have to compare with the year end. You have to compare with the year end. Now, in this case, right, the year end is September. The examiner highlighted a common error. So I want you to take note of this. Listen carefully. Do not repeat this mistake. Some student says, oh, it is now 1st of July. Year end is September. So how many months apart? July, August, September. Oh, the auditor only have 3 months to do audit. This audit don't have enough time. Then the auditor may not be able to get sufficient and appropriate evidence. Ladies and gentlemen, do you agree that they have only 3 months to do the audit? Type yes if you agree with what I say. Do you agree if I tell you the auditor only have 3 months to do the audit? Type no if you think there are no. Auditor actually have more time. Auditor actually have more time. The auditor can still do audit even after the year end. So type yes if you think that the auditor are only left with 3 months. Type no if you think auditors still have more time. Okay, I think the answer is very straightforward. Okay, if you don't know, make sure you now know it. Auditor, right? They don't end the audit straight away at the year end. Come on. It is now 1st of July, 3 months before the year end, they start to plan. Extremely good. This is very good. It is very, very good. They are going to continue to do the audit even after the year end, then only they sign the audit report. So don't make this mistake. You don't go and say, oh, they only left 3 months. You not enough time. No, you don't say that because it's a common error. If you write like that, the examiner will be like, this student know audit or not? Maybe this student don't know audit. You give a very bad impression to the marker. You see, does impression matters in marking? Of course. If the, markers are human, markers are not computer, If they think like, hey, this student macam don't know audit like that, so they are biased already, And when they are biased, when they mark their script, maybe they try to be independent, they try to be objective, but somehow, bias cannot be avoided one, somehow. So you better be careful. These are common errors that you cannot repeat. Now we move on. Gruber Core is a new audit client, ladies and gentlemen. You see this, right? You should be very happy. You know why? Let's quickly check the requirement. The requirement here is evaluate the significant audit risk. Yes. Okay. Now, this is what I call planning, ladies and gentlemen. This is what I call planning. You see, it is important for you to label your answer properly. Okay, A and B. I haven't typed the full format yet. This is a briefing note. You need to have some format. Then A and B. So B is significant audit risk. B is significant audit risk. So I'm going to put here significant audit risk. Okay, so the first audit risk is new audit client. Now, why is new audit client an audit risk? Okay, the idea is there is a higher detection risk. Now look at how I do it. I only type point form now. This is my planning. I know that I want to write there is a higher detection risk because the auditor lacks cumulative understanding of the audit client. So they may not be able to detect material misstatement. Okay, apart from that, the opening balance might be misstated as well. because they don't audit the last year account, they don't audit the last year account. So the opening balance or the comparative might be misstated as well. So the auditor need to spend time to audit the opening balance and the comparative. So you see, I am just listing down the point like this. Later on, I elaborate. As you read, you plan like this. Don't plan on a piece of paper. Waste of time. Do you plan here? There is a scratch pad. Do you plan here? Don't use this, ladies and gentlemen. Just consider this scratch pad as a redundant thing. Plan here. Now, maybe you tell me, hey, what if when I submit, right, the answer not elaborated, still point form? Better than nothing, right? At least the examiner look at it. Point form, maybe they kesian you, they give you a bit of marks. You may ask me, examiner will kesian me one me? Maybe, you never know. You never know. Maybe they will kesian you. So if you write some point form like this, and if you don't have time, you submit, right? At least you still have something, So do this. This is what I call by plan your answer as you read. You plan it like this. Write the relevant point form that comes to your mind immediately. Then you move on. As you read, you move on. Now, do you get me or not, ladies and gentlemen? If you get this exam technique, you type yes. Say yes in the comment section. Let me know you get this exam technique. Very important. You do this, it will save you a lot of time. You trust me. A lot of time. Say yes if you agree that this is a good exam technique that you are going to use in your exam. Now, I see the comment section. Ming Seng says, in Malaysia, 6 months to submit SSM today from the year end. Yeah, thank you very much for the information. Yeah, right. 6 months. So that's why the auditor, they will spend some time to do. A listed company, maybe shorter, 3 months, because they need to report to the Bursa Malaysia. Yes. Okay, good. I can see that all of you want to put in this exam technique. Trust me, it will increase your chances of passing. Now, let's move on. You can close this one. Don't worry, because autosave. It is autosave. So autosave, you close it, it will still be here. Okay, new audit client, the audit firm is appointed in January. Okay, so the audit firm is appointed during the year. The audit previously was performed by Alice Associates. So this is the ex-auditor, ex-auditor. Gruber Co. is owned and managed by Gruber Company. So it is a family-owned business. Is it listed? I don't see anything that says it is listed. Now, ladies and gentlemen, when you are doing audit risk question, or maybe not audit risk question, any question in AAA, check whether are they listed. Because listed company, you may have different audit risks that can arise. For example, listed company, maybe they want to maximize profit to increase share price. Maybe only. I want to talk about this management bias issue in a short while, okay? Because you don't simply assume. You don't simply assume. In this case, the principal operation is the design and construction of bespoke machinery used in the oil industry. Now, when you read this, some students, they will be like, oil and gas industry. I never worked in this industry before. I remember my teacher tell me oil and gas is very complicated. Die law. I think this exam I will fail. Come on, ladies and gentlemen. Do you think the examiner will give you an industry, right? And do you think they expect you to have detailed industry knowledge? Of course not. They will give you this, even though it's in the oil industry, all the information that you need to know is in the exhibit. You don't worry. Whatever industry you get, you can answer it one. No problem. So don't get panicked when you see, hey, I never do a question on oil industry. Will I die? No, you won't die. Sometimes you die because you kill yourself first. Don't kill yourself. Okay? Don't give up when you see the question. Can do one. You have to believe in yourself. You can do. Can, no problem. So this is design and construction of machine. So yeah, let's see. Later on, they will tell you what they are doing. The following exhibit on the left side has the information relevant to the question. So we have the partner's email, okay, the business and governance information and matters relevant to audit planning, financial information on the recent management account, business development on investment property and customer contract. Meeting notes is a meeting notes at the recent meeting with the board of director. Okay, so the information should be used to answer the requirement. Okay. You are given briefing notes and spreadsheet. Spreadsheet is normally used for ratio analysis or for trend calculation. I will show you how to use this as well. It's actually very easy. You don't need to worry that, ACCA Excel, why so chat one. I know some of you tell me, like, you see, why ACCA one cannot insert column, cannot insert row? Why? Yeah, so yeah, don't worry. It doesn't matter. For me, this one is still an issue that can be solved. No problem at all. Okay, no problem at all. So don't worry. Now let's look at the partner's email. Okay, let's look at the partner's email. So to audit manager from the partners audit planning 1st of July. Hello, I have provided you with some information, blah, blah, blah. Okay, read everything. The second sentence you have a look, be careful. As you know, Gruber Core is a new client and the firm client due diligence, know your client and acceptance procedure were all successfully completed. So which means, right, the procedures that the auditor have to do before they accept their client has been done. Now, ladies and gentlemen, I'm sure by now you know, can auditor audit any client they want? The answer is no. Why no? Very simple. I always tell my student, do you want to accept anyone to be your girlfriend or your boyfriend? Of course, no, right? What do you need to do? You need to do background check. You need to know whether that person is a good person or not, right? So you don't go and simply accept anyone as your girlfriend or boyfriend. So that's why auditor is the same. They don't simply accept anyone as their client. So all this background check already done. If it is already done, you don't go and suggest them to do it again. Ladies and gentlemen, can you understand what I'm trying to tell you? If the question tells you they already done all this due diligence and know your client, when you write your answer, you do not go and tell them to do these procedures once again. If you get what I'm saying, you type 333. This is extremely important. The examiner has highlighted a lot of candidates, they ignore this, they still write the same thing and they don't get the marks. So they are wondering, hey, I write a lot, how come I still don't get the marks? The reason is you don't read the question. If you understand, you type 333, all right? Make sure you read the question carefully. Okay, yes, I can see that you will understand it. So read carefully. The examiner actually say, please read carefully. If you don't read carefully, you can get the answer wrong. So you need to prepare briefing notes. Okay, so at this point, I can start to prepare the briefing notes already. Okay, to get the professional marks, make sure you give, you type briefing notes like this, okay, and then you bold it, to, from, subject, date. No, make sure you follow this format. This format, 1 mark. Okay, there's 1 mark given for this format. So to be careful when you can just straight away copy like this, to the engagement partner, copy, paste from audit manager, okay, from audit manager. Subject, just follow audit planning for Gruber Core. Okay, audit planning for Gruber Core. Date 1st of July 20x5. Okay, then you need an introduction. All right, you need an introduction. So how do you write introduction? Simple. Refer to the requirement here. You just summarize what they want. Now you see how I summarize. Okay, it's actually very easy. You see, first I'm going to see these briefing notes considers copy, paste, done. Apart from that, the significant audit risk to be considered in this one, the evaluation of the significant audit risk to be considered in the company audit is also included. Next, furthermore, you see, you remember these few words. Apart from that, furthermore, furthermore, this one. The principle, blah, 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 is also included. Last one, finally, the ethical issue raised and the change the wording a bit. The recommended action to be taken by all of them is also included. Done. You can start A already. You see, how long do I take? I think less than 1 minute, right? So you should be like this also. Don't spend too much time in this introduction. Some students, they spend a good 5 minutes to come up with a perfect introduction. Come on, don't. you can copy and paste in the exam. You can copy and paste in the exam. Copy and paste lah. Use the technology, So that's why I like computer-based exam. It's so nice, Last time, when we sit for paper-based, some of you here, maybe you have the experience paper-based. Wow, you write until your hand almost go cramp like that. Now, so easy. Copy, paste, done. Okay, so don't spend too much time here. You see, I just copy and paste. I don't even think too much. I just maybe look through, or maybe some language I change a bit. Done. It's that easy. Okay, then we go on now. A is what? A, they ask for matters specific to planning of initial audit engagement. So I will just type like this. Now A, then matters specific to the planning of an initial audit engagement. Okay, you see, you get marks for this part here. You get marks for having an intro. You get marks for using subtitle like this. Subtitle like this. You use subtitle inside your answer. You get marks. So that's how you get 3 marks. That's how you get 3 marks. So let me repeat. The 3 professional marks comes from using a good title. Okay, a good title, the opening, having a good intro, and then using subtitle inside the briefing notes. So you get 3 marks already. The last mark, it comes from your explanation. If you are good in explaining, you get that 1 mark. If you are not that good, maybe you don't get the marks. But it doesn't matter, free 3 marks for you. That is how you can easily get the marks for professional marks. Okay, now the first one, you see, the first one. Discuss the matters specific to the planning of an initial audit engagement, which should be considered in developing the audit strategy for Gruber Corp. So they are asking you, because this is an initial audit engagement, what are the matters that the auditor need to consider when we want to develop the audit strategy? And they give you a note here, they say, you do not need to discuss matters relating to whether it was appropriate to accept Gruber Corp as audit client as the acceptance is confirmed. You see, the examiner is so scared, you repeat this. And guess what? Even though they write this, students still repeat. They say, the auditor need to contact with the previous auditor to see if there's, to do professional clearance, to see if there's any issue related to accepting. Already done when they do the know your client, So then some of them, they say they need to consider the integrity of the management. Already done. So you don't write answer like that. Now, the examiner commented, generally, this student, student, they either don't do well or they just leave empty. Don't leave your answer empty. Now, you think first. If you don't know 6 points, you write 3 to 4 points, can or not? I think you can. So what are the points that you can write? Now, I'm not going to go through this, in very detail, but I give you some ideas. If you get this question, you see, you think yourself, first, to answer this question, you are no longer a student. You are not a student when you are in the exam hall. You are an auditor. Hey, teacher, I never do audit. Never mind. Imagine you are an auditor. You ask yourself, okay, I am doing first year audit. What should I do? What are the things that I should do? First year audit, last year auditor is someone else. Maybe I find that auditor, but you don't find that auditor to ask them about, can we accept? No, you don't do that. But you find last year auditor, you ask them, hey, can you give me your file? Can I refer to your working paper? I want to understand the issue. Can you do that? Can. If they allow you to give you, they give it to you. So this is one item, Maybe you want to look at previous year or previous auditor working paper. Maybe you want to refer to this previous year or previous auditor working paper. Maybe you want to look at the previous year auditor's report to see if there's any modified opinion in the previous year. We want to see in the previous year, is it all clean report? Are there anything in the previous year auditor report that says qualified or whatever? Maybe you want to consider the appropriateness of the accounting policy. You need to spend more time to understand the business, the internal control system. Maybe you need to spend some time to audit the opening balance, use experienced team. These are just some of the example of the point that you can write. You just need 6. Okay, you just need 6. No need to elaborate like 1 point. At least like, at least this 1 point, maybe you write 2 sentences. At least you for every point you write 2 sentences for this kind of question. So in short, 6 marks, right? If you can write 12 sentences, good enough lah. Don't write more than that. Okay, don't write more than that. So that is how you answer this question. Just write a bit. You may not be able to think of everything, but I think you can think of something. 1 or 2 is better than nothing. So just write something. Okay, just write something. Now, this is not what I'm going to focus on today because my focus is more on this one. I want you to really know how to write audit risk well. Okay, because audit risk, you see, 24 marks. If you don't do this well, you cannot pass this paper. Trust me. Okay, because out of everything in the AAA exam, significant audit risk is the easiest. If you can't score good marks here, you have a difficult chance in passing the exam. Okay, so I'm going to focus on here. So, ladies and gentlemen, if you by the way, in any time when you have any question, you just leave the question in the chat box, because because I don't know whether you want to ask question or not. If you want to ask, you just ask. But now I'm going to move on to the significant audit. So now look at this. The question says use the information in exhibit 1, 2, 3, 4. There are how many exhibits? There are 5 exhibits, and they ask you to only use 1, 2, 3, 4. So you don't waste your time and look at meeting notes for 5, and then you write answer based on 5. No, you only refer to 1, 2, 3, 4. So how are you supposed to use this exhibit? You read through everything before you start to write. But as you read, you do the planning like this. So I'll show you how to plan. But ladies and gentlemen, before I go on and start, there are a few things that I want to tell you. It's quite important. If the question asks for audit risk, if the question asks for audit risk, you can write risk of material misstatement. You can write you can write about detection risk. Okay, you can write either one of these, either one. But if the question only asks for risk of material misstatement, you make sure you don't write detection risk. In short, read the question carefully. Now, what is detection risk? Detection risk is the risk that the auditor cannot detect mistake. Example is this new audit client. Okay, is this new audit client? This is an example of detection risk. Okay, so if the question asks for risk of material misstatement, you don't write about this. That is very important. Okay, that is very important. So, now, what are the few things that you have to take note when you write audit risk? First of all, okay, I write down some key points for you. You may want to jot this down. There are some very crucial things that you have to know first before you even attempt risk of material misstatement or audit risk question. First, you see the question, not this. You see the question. The question is asking you to evaluate the significant audit risk. Evaluate. Your focus is on evaluation, right? Focus on evaluation, not on procedure, not on strategy. Okay? You just need to explain a few things. Okay? Explain a few things. So the examiner expect you to explain how and why there is a risk. Okay? How and why there is a risk. That's what they want to know. They want to know what is the implication on the financial statement. That is what you should focus on. So your answer, you must be saying, okay, this issue, there is a risk of something happen because of this, or something can happen, and as a result, the non-current asset, the intangible asset will be overstated, for example. So that is how you should focus. The examiner is looking at whether do you know that issue. When an auditor look at that issue, they'll be like, this one, I think the financial statement can be wrong because of this, because of that. That's what the auditor want, That's what the auditor wants. So that's what the examiner wants you to demonstrate. So you don't write about what the auditor should do. You don't write about the strategy to audit, but you just focus on explaining why is that area we need to focus on. Now, remember, whenever you can calculate materiality, you must calculate materiality. This is a free marks, by the way. You see, how many marks for this question? 24 marks. 4 marks is for materiality. Materiality marks are given on top of your explanation. When you explain an audit risk, generally, one audit risk, you get 3 marks. Sometimes 2 marks. You can even get a risk that has 4 marks. It's possible, assuming if you elaborate enough. But this is generally. Generally, one audit risk is 3 marks. Can be 2, can be 4. But materiality is extra, extra. So for example, if an audit risk, the marking scheme say 4 marks. If you calculate materiality, you get 5. Not 4, but 5 if you write it perfectly. So if you don't calculate materiality, you are going to lose out a lot of marks. And is it difficult to calculate materiality? It's not difficult. Generally, this is what I remember. If anything is more than 5% of profit before tax, if anything is more than 1% of total asset, okay, or revenue, it is considered as material already. That's what I remember. Okay, although some of you may tell me, hey, but total asset is 0.1 or something like that. I don't care about that. In exam, I don't have time to care 0.5 or 2, whatever. I just remember 1. And most of the time, not every time, most of the time, you will see that the question is either clearly material or clearly not material. It's very clear one. So I just remember 5% profit before tax, 1%. So as long as you see there's a figure, then you calculate the materiality. Very important. I heard some students, they tell me they fail, and they tell me, I should have calculated materiality. I think I failed because I don't calculate materiality. They fail at maybe 47, 46. Okay, so just be careful of that. Okay, then next is, whenever possible, accounting rule you have to explain. Okay, the relevant accounting rule must be explained. This is where you apply your SBR knowledge. You have to put in accounting rule and apply. Okay, again, apply. If you don't apply, you don't get the marks. You have to apply. Okay, and the examiner say, if you only write 1 to 2 sentence, sorry, you cannot pass. Okay, this is not enough. So if you write an audit risk and you tell me, I write 2 sentence only can. Cannot lah. Okay, I will tell you cannot lah. I will show you one or two example of a full audit risk explanation. Then you will know. If you tell me you only write 1 or 2 sentence, I can guarantee you cannot pass this paper. Okay, it is only very it is only like if you are very lucky, right? Then you will pass. Okay, but generally not 1 or 2 sentence. It has to be at least 4 sentence. At least 4, in my opinion. 3 to 4. The more the better, but don't write too much. Don't write too much. The next thing is, you don't go and write like this. Some students, they write, they think that, I think I write 12 audit risks. They say, not this. They say, 24 marks. Okay lah, I write 12 audit risks. 12 multiplied by 2, I should get 24. It should be okay. Don't do this. Don't do this. Okay, if any one of you is thinking like that, you want to write 12 audit risks and then you multiply by 2, you get 24. Don't do this. You know why? I can guarantee you a lot of this one, right, that you write is not going to give you marks. For your information, if you check the marking scheme, this sitting, they only give you maximum 9 audit risks only. In the marking scheme, they give you 9 audit risks only. And there is a very good reason. You see, the question asks for significant audit risk. Significant audit risk. They don't ask you for audit risk, but they ask you for significant audit risk. A significant audit risk means it must be a serious issue. Okay, it must be a serious issue. So let me explain to you, what do I mean by, do they mean by significant? You see, significant means it has to be, specific to the scenario. It has to be specific to the scenario. It must be something that is non-routine. Non-routine means it don't happen all the time. Maybe something new that happens during the year, that is audit risk. Maybe something new that happened during the year, something that involves judgment, something that can result in risk of material misstatement. These are significant. Okay, so that's why if you write 12, very likely some of the risks that you write is not significant. It means those risks, if you read, you will be like, it's not that serious. What do I mean by that? I give you an example. Okay, let's look at the case. I give you an example of what are the answer that the student write, in which it is actually not important one. Okay, let's see. I need to find it for you. Okay, I need to find the issue for you. So let me see. Okay. Building. Which one is the building one? Let me just quickly check. Okay, yeah, maybe it's not here. Don't worry, but I give you some example that I think of. Right, I give you some example that I think of. Maybe it's not in the case, but it's okay. Hi, Winnie. Welcome once again. Welcome. Okay. Let's just say this. Okay, let's just say, if the question say something like that, if the question say the company on, okay, the company has a, the company has a head office. Okay, maybe the company has a head office, which is on, okay, which is on. Okay, head office which is on. Now, head office which is on, right? A head office which is on by someone. When you on the building, you need to depreciate. For example, you need to depreciate. So then some students say, oh, there is a risk that the client may depreciate the office wrongly. They may say, oh, the client may use a long useful life, which is not realistic. Now, you don't simply talk like this, because if the question just say, oh, they own the head office, for example, they say, oh, they own the head office, you don't go and say, the risk is they may depreciate wrongly, because this one, the case never say anything they never say anything about the useful life has been increased. They never say anything about something is wrong. So imagine you don't imagine audit risk, you don't imagine the scenario. Now, another one is maybe they say, oh, the building is lease. Okay, the building is lease. So lease, they apply maybe IFRS 16. They apply IFRS 16 leasing. So some students, they will be like, oh, when they lease the building, they may not recognize right of use asset. They may just expense off the rental payment. Now, this is also assume, this is also assume. In short, if you realize that you are assuming, okay, or we call it if this is purely speculative, okay, if it is purely speculative, my apologies. Suddenly my stylus just decided to become putus. Well, I change another one. Sometimes this happen. Right. Hope this is better. So you see, I was saying this. If you realize that you are writing something in which you are just assuming, or if you are just writing something speculative, it will be not accepted. All right, it will be not accepted if it is just speculative. So don't write something like this. You don't write something like this. Instead, you have to write something. You have to write something that the case actually says about it. For example, this one is from the case already. Okay, this is from the case. The business development here. This one. Now, ladies and gentlemen, you look at this. You look at this. So the investment property here in October 20x4, in October 20x4, uh, following the completion of a significant contract, the company purchased an investment property. Okay, they purchased an investment property, the Nakatomi building, for 15 millions. Okay, the name looks, seems like Japanese name. Okay, so yeah, for 15 million. Now, why cannot highlight? Sometimes CB is like this. Okay, yeah, for 15 millions. Now you see a value is given, right? A value is given. If a value is given, you know that you have to calculate materiality. The examiner, when they give you value, right, they are hinting you this can be significant. So this one is likely that you need to write something. So the property is a retail development in the country capital city. The company is going to appoint an expert to provide a valuation of the property. Okay, and then an initial estimate of increase in fair value of 2 million, it has been included in the company financial projection. So is this a significant audit risk? I will say yes, for a few reasons. Number one, you need an expert to provide a value. This means that it is highly, it is judgmental. So you see, as I read this, maybe I'm going to write already. I'm going to write investment property. Okay, investment property. So what are the points that is possible? So maybe you can say investment properties, right? Investment properties, because the fair value, they are want to use fair value. So fair value can is estimate, okay, which involve significant judgment. Okay, is an estimate. It involves significant judgment. Okay, and potential to be manipulated. It can be manipulated if there is a management bias. Okay, if there is a management bias. Okay, so and then yeah, so you put it like this, all right? You put it like this, and then you are going to find out like increase in 2 million. All right, maybe we can quickly do a quick calculation. They buy for 15, they expect an increase of 2 million. So perhaps you can try and calculate the increase in fair value of 2 million. It is how many percent of the cost? Then you calculate 2 divided by 15. Right? 2 divided by 15. That is around 13%, that's around 13%. So maybe you can say this seems like a significant increase. Okay, risk of overstatement, maybe overstatement of profit, assuming that if they use fair value model. Okay, assuming that if they use fair value model. Okay, if fair value model is adopted. Now, ladies and gentlemen, the examiner did mention that when you are writing this audit risk, some students, they may not be that familiar with the accounting treatment. They say, oh, fair value model, the changes in the fair value goes to OCI. No, fair value model is, if fair value model is used, the changes in the fair value actually goes to SOPL. These are the accounting treatment which you can write. Okay, which you can write. So yes, maybe 13% of the cost increase in 13%. Maybe you want to calculate based on the percentage of profit later on. Then you can comment. Yes, it is a significant risk. So that is what I want to tell you. When you write audit risk, you have to consider first, is the risk significant? If it is like what I gave you, you own the head office, you depreciate. They have been depreciating the office for many years already. They lease the building. They already it's just maybe they already leased it previous year. It is not a new transaction this year. So this one don't write. Instead, you write about something that is new. In this case, is a new investment property. Yes, it is going to be significant. It is going to be significant. Okay, so that's about a speculative risk. Okay, that's about speculative risk. Okay, now the next thing that I want to tell you, ladies and gentlemen, the next thing that I want to tell you is I have been talking about management bias. I've been talking about management bias. There is an issue with this answer in which students sometimes simply write, So let me explain. Make sure you don't make this mistake in the exam. Management bias. Generally, students write like this. They say, okay, you know what? If the company is listed, they say if the company is listed, they want to make the shareholder happy. And then they say, oh, if it is not listed, they want to reduce profit so that they can save tax. Which means some of you may think like this also. Maybe you read the question, you see, oh, listed company, I'm going to write something like, oh, they will have the incentive to increase share price so that shareholder happy. Or not listed, then the management want to save tax so they will reduce profit. But the thing is, ladies and gentlemen, these are again just your assumption. Don't assume, You don't assume. You do not assume. You do not imagine. Please look at the case. Okay? Please refer to the case. Every question has a different management bias issue. Every question has a different management bias issue. Now, what is the management bias issue in this question? Okay, I'll show you. Now, somewhere in the case, okay, let me just close this. Somewhere in the case, I think it's here. Oh, yes. Just now I didn't open the exhibit 2. So sorry. Yeah, it's here. I remember I read this somewhere. You still remember the issue, a head office and lease building? Then it's here. Then the company owns a head office and lease the production facility. Some student go and write audit risk out of this. Okay, that's not good. Okay, that's not good. So you don't write audit risk based on this sentence alone. Okay, you don't write it based on this alone. But I want to highlight your attention to this one. Martin, okay, Martin is the original founder of the company. Martin is planning to sell his shares. Okay, Martin is planning to sell his shares and retire from the business. So you see, they want to sell their shares. So, ladies and gentlemen, I want to ask you a question. If you have a business, you want to sell your shares, would you want to sell your shares to be higher value or lower value? You answer this question. Do you want to sell higher or lower? If you think that you will sell it higher, you type high. If you think that you will sell low, you type low. You want to retire, you want to sell your shares. Will you sell high or you sell low? Okay, I will wait for your answer to flow into my screen here. But before that, we see. So Craig and Iris, who are younger than Martin, they will retain their shares in the board position. Initial discussion with a potential acquirer began last month. Yes, I can see that comments are coming in already. Yes, high, higher, high, high. Okay, a lot of answer is all of you agree. Higher is better. High is better. Yes, I agree with you. High is better. Now, this is the management bias. You know that Martin is going to sell the shares. So the risk of management bias, okay, the risk of management bias is like this. Okay, so I'm going to write here management bias. So I'll copy a bit. Martin is planning to sell shares. Martin is planning to sell shares and retire from the business. Incentive to make the profit higher or asset higher, make the company looks more attractive. Okay, so you see, this is more related to the case, rather than when you compare like this. This company is not listed. They want to save tax. They want to reduce profit. When you say like this, right, it has nothing to do with this point, But if you are able to pick up something from here and you put it in the answer like this, then it makes sense already. So now we know there is an incentive to make profit higher or asset higher in order to make the company looks more attractive to the potential buyer. So that they can sell at a higher price. Okay, then you can say, look, this can be evidence from certain accounting treatment, okay, of the company, such as, at this point, we don't know because we haven't read the case. If you read the case, you will know. If you know the banishment bias already, you read through the case, you may find out that a lot of time they are trying to jack up the profit. They want to make their profit higher, or they want to make their asset figure higher. I will show you. I'll show you how can you link this. For example, okay, for example, if you look at this part, all right, if you look at this part, so the revenue is here, the revenue from 65 they increased to 75. Revenue increased quite a lot. And then operating profit also increased a lot. Profit before tax increased a lot. Total asset increased a lot. Intangible asset also increased. Everything increased. Okay, everything increased. So it's a bit related to what we are saying here now. When you get this information, you need to do ratio analysis. You need to calculate the trend. So how do you calculate the trend? I'll show you in the spreadsheet later on in a short while. But let's read this. Let's just quickly read this. So revenue is derived from contract involving design, manufacture, and installation of machinery to customer order. Currently, the company established all of its customer contract to only one performance obligation. So currently, they say there are only one performance obligation, which is when they successfully install the machine at the customer premise. However, around a quarter of the contract has a 3-year support service. So if you know your standard, you should know that this 3-year support service should be taken out. It should be separated out. So it's not one performance obligation. It should be 3-year support service. Now, when you have 3-year support service, you should recognize the revenue attributable to this support service over 3 years. But do they do so? They don't do so. They treat it as one performance obligation, which means they recognize revenue when they successfully install the machine. That's all. And that's not okay, which means another audit risk here is the revenue, okay, the revenue from contract. I write some point here. The revenue from contract, it should be, they treat as one performance obligation, okay, where they recognize revenue, okay, they recognize revenue upon the successful installation of machine at the customer premise. However, there is this 3-year support service. 3-year support service should be treated as a separate performance obligation. It should be treated as a separate performance obligation. Okay, and which means revenue attributable to the support service should be recognized over 3 years. As such, there is a risk of revenue or recognized too early and risk of revenue overstated. So you see, this one, right? If you understand the accounting issue, sorry, because I don't really have the time. I see the time now is 9:04. I still need to cover question 3, so I cannot explain too detailed, but I give you an idea. The idea is they should recognize some revenue over the next 3 years, but they don't. They recognize it immediately. So as such, revenue is recognized too early, revenue overstated. Is this relevant to this? Yes. So you can say such as the early recognition of revenue on what? On the support service. On the 3-year support service. Maybe there are more. So that's why, you see, this is what I call planning, When I plan this part, I don't know I'm going to write this. But when I read here, I plan this. Now I know, this one, I can use it as a point here as well. This is called using the information in the case. You try and link different exhibits together. Ladies and gentlemen, can you understand this technique already. This is expected, just so you know. To answer AAA question, you need to be able to synthesize and use the information in this way. Now, if you can see it already, you type yes, say yes, let me know you get the idea already. So in the exam, you try your best to do like this. You try your best to do like this. Say yes, let me know if you can see how we link this point to this management bias. Say yes, okay? Let me know. Let me just drink. I'm a bit thirsty. All right, can you see that? Yes, okay, yes, I can see that some of you say yes, good. Okay, now I'm going to just show you, one or two write-up for this audit risk. You see how I write, okay? You see how I write. Before I write, let me tell you, please jot this down. Very important. How to write audit risk. How to write audit risk. First, materiality. Okay? First, if there is materiality, please write materiality. Second, copy some information from case, which means Control C, Control V. Okay? Control C, Control V. After you copy from the case, accounting treatment, put that in. No need to refer to the standard number. No need to refer to standard name. You don't even need to say according to IFRS 15. You don't need to say according to the standard on revenue from contract with customer. No need. Don't need. You don't need to refer to this. No marks. Okay, no marks. Don't worry. But you need to be able to write the treatment. The treatment is like this, treated as a separate performance obligation. Then allocate the revenue to the performance obligation. I'll write this for you later, then you will see. Okay, so write the accounting treatment. After you write the accounting treatment, you try and link to the case. Okay, link to the case. Okay, so what is the risk? And finally, what's the impact on financial statement? 5 things. That is why I tell you, if you write audit risk, 2 sentence only, can you write 2 sentence out of all this? Impossible. Impossible. Okay, impossible. So you try and follow this. Now, I'm going to show you how you write an audit risk according to this structure. Okay, if you follow this structure, there should not be any issue, okay, for you to write. All right, so now let's see. Okay, let's see. Let us write about the investment property first. Okay, I write about the investment property. I'm going to use this method. Now, where is the investment property? Is here. Okay, investment property. Okay, is in exhibit this one. I jump a bit. I just want to show you how do I write if I want to write the audit risk on investment property. I show you 1 or 2 examples. So first, I will copy the case. Okay, in October 20X4, blah, 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 15 million. 15 million, right? I need to calculate the materiality. This represents how many percent of total asset? I remember seeing the total asset in the financial information. So total asset is 120 million. Ladies and gentlemen, make sure you use the right year. You are auditing 20X5. You use the 20X5 figure to calculate materiality. 120. Okay, so I will put the working in. 15 divided by 120, 100%. You see, I key in the what is that? The working first. I key in the working first, before I calculate the percentage. So 12.5% of total asset. Is it material? Okay. Before that, I know that there is a 2 million increase in fair value. there is also an estimated increase in fair value of Nakatomi building investment property of 2 million. Okay, this represent the profit before tax is 14. 14.3% of profit before tax. Okay, as such, the investment property is material to the financial statement. So the first paragraph, you see, I copy something from the case, right? I copy something from the case, and then whenever I get the figure, I'm going to say, oh, it represents how many percent, it represents how many percent, and is it material? This one, you can get 1 mark, okay? You can get 1 mark. So then you can say, okay, then you see, yeah, have we done materiality? Yes. Have we done copy from the case? Yes. Next is accounting treatment. So you can say an investment property can be accounted for using fair value model with changes in fair value recognized in the statement of profit or loss. Okay, this is the accounting rule. All right, so we put in the accounting rule. Okay, then you can say that okay, as fair value involve estimates, okay, and it also involve significant judgment, there is a risk that the fair value adopted might be overstated. This is because fair value has the potential to be manipulated, especially since there is a possibility of management bias, okay, as explained above or below. Okay, this one I don't know. I don't know where I'll write. So you see, the whole idea is, we say that fair value involve estimate. Fair value involve estimate. This is what I say, what I call by, you have to link to the case, you have to talk about the risk. The linking to the case is because the company uses fair value, so fair value involve estimate, it involves judgment. The risk is fair value is overstated because it can be manipulated because of the possibility of management bias. Okay, then you can also say, apart from that, the increase in fair value of 2% is 13% of the cost. Okay, these appear to be a significant increase. As such, so you see, when you do this trend calculation, and you apply it in the case like this, you can get half mark, You can get half mark if you do this trend calculation. Half mark is actually awarded. So as such, there is a risk of overstatement of investment property and profit. That is your final conclusion. That is the impact on the financial statement. Now, if you write like this, you guess how many marks you can get. Okay, I will tell you. I want to look at the marking scheme. Okay, you can of course look at the marking scheme yourself, but investment property, maximum 4 marks. Maximum 4 marks. So the answer that I write for you is very detailed. You can get 4 marks. You calculated materiality, 1 mark. You calculated a trend, half mark. So the total marks awarded here, 5.5. You see, there's a lot, There's a lot. So I hope that you realize something, ladies and gentlemen. You do not go for quantity. Instead, you go for quality explanation. Write a few audit risks, but you focus on elaborating your answer well using this method. Okay, maybe I write, I elaborate this management bias risk for you. Okay, I elaborate this management bias. Management bias risk is normally lesser marks, 2 marks only. Yeah. So I'll just quickly elaborate. Martin is planning to sell his shares and retire from the business. Okay, as such, the company may have an incentive to make the profit figure higher or the asset figure higher. Okay, this is because the management may want to make the company looks more attractive to the potential buyer so that Martin can sell his shares at a higher price. These can be evidence from certain accounting treatment of a company, such as early recognition of revenue on 3 years support service, okay, and the significant increase in fair value of the investment property. All right, that's roughly, the idea of how do you write a management bias risk. Okay, so yeah, if you can write like this, because you see the answer for this is shorter. The maximum marks awarded here, 2 marks. Okay, so I guess that's what I want to tell you. I hope I can write more answer for you, but due to time, I want to also spend some time to cover other questions so that you know something. But ladies and gentlemen, can you understand already this approach? If you get it ready, you have a better idea of how to write audit risk, and you want to try your best to write audit risk using this method, you type for me 555. Ladies and gentlemen, type 555. If you already roughly see how do you use this way to write audit risk. This is exam technique which I want you to use. If you use this, you can help. Okay, it can help you. 555 if you already got it ready. In the meantime, I want to answer a question in which some of you is asking. Okay, some of you may want to ask me, teacher, you asked me don't write 12. How many should I write? Very valid question. How many audit risks to write? You see, as you go through the case, right? You look through, as you plan, then you count how many do you have. Thank you for sharing such a good teacher. Hey, teacher, you are here. You are here. Hey, okay lah. I think you can share better tips than me. Come on, teacher. Yeah. This Y Lim is actually my previous teacher. Okay, I think you can share better tips than me. You have any tips want to give to the student here? You can also type in the chat. Okay. Anyway, how many audit risks to write? My suggestion to you: 6 to 7. If you don't have time, you write 6 lah. If you really don't have time, you write at least 5 lah. But I would suggest you 6 to 7 is good enough. You know why? I roughly calculate for you. If you take 6 multiplied by 3, it's 18, right? 18. Plus 4 marks materiality if you have it, then you get 22 already. Another 2 marks, right? For trend, for the ratio that you apply, I think you can lah. So that's why roughly 6 to 7 good enough already. You don't go for quantity, you go for quality. Choose the one in which you feel it is more serious lah. Okay, choose the one in which you feel that is more serious. Okay, that is how we structure our answer. That's how we structure our answer to make sure that you don't write too much, but you go for quality elaboration. Okay, yes. Anyway, I promised to demonstrate to you quickly on how do you use the spreadsheet, right? Okay, I'll just quickly demonstrate to you. Okay, because I know some of you, maybe you tell me, I never have used spreadsheet before. It can happen. So that's why I want to elaborate just a bit to you. Okay, just a bit to you. You can practice this. By the way, my live stream is, you can play back. So if you want to look closely at how I deal with this formula, you can play back. Okay, first you see, we have all these things here. So I'm going to type appendix. Okay, I'm going to type appendix. So first one, projected to 30th September 20x5, $million. Then actual to 30th September 20x4, 20x4, $million. All right, so here we have revenue, we have operating profit. You see, I accidentally typed this E as capital letter. In exam, you don't need to care. We don't have the time. So we type 75, 65, 18, 10, profit before tax, 14, 9, total asset, 120, 88, intangible asset, 19, 10. Okay, so this is what you will do. Okay, this is what you will do. I maximize this screen now that I have typed in everything. What we need is, okay, we need the trend. Okay, we will need the trend in $million, and we need the trend in percentage. So to calculate the trend in $million is very easy. Just take current year. You see, I type equal current year minus prior year. Okay, equal current year minus prior year. And you see, you can move your mouse here. Look at my mouse. I point my mouse towards the bottom right side of this cell. The mouse is going to change the shape to this plus. You just drag down like this. Everything will be calculated automatically for you. So that's the benefit of computer-based exam. You don't need to calculate it one by one. Now, what about the trend in percentage? The trend in percentage, you just use this difference divide by last year figure. Okay, the difference divide by last year figure. So again, I'm going to drag this down, remove the one that is 0. You look at this one, on top of it, you have a percentage. Click this percentage. It becomes percentage already. So from here, you can see, revenue increased by 15, operating profit 80. Hey, this one very significant. This one very significant. You have to comment something about this. Profit before tax also increased quite a lot. Everything increased quite a lot. Intangible asset 90%. Oh my God. Okay, some ratio perhaps. Maybe you can calculate operating profit margin, for example. Okay, operating profit margin. Operating profit margin is you take operating profit divide by revenue. Then you can drag across. Change it to percent. You see, the operating profit margin increased quite a lot. Profit margin, we use the profit before tax. The profit margin, if you want. Okay, then you calculate once again. Yeah, so also a significant increase, right? Also a significant increase. I can even calculate the percentage of increase here. If I want, yeah, so increase in 8, increase by 4. Okay, so that's all you need to do. That's all you need to do. And later on in your answer, you can use this as your supporting. If you are able to use this as your supporting, you use one time half mark. Use one time half mark, 2 times then 1 mark, up to a maximum of 3 marks. Okay, that's about the spreadsheet. All right. Now it's already 9:25. I spent a lot of time to talk about this. Okay, so now that I think you know the idea already, there are some other issue here, like for example, the principal audit procedure. Now, ladies and gentlemen, principal audit procedure is very similar. Is very similar to the one that I conducted yesterday. The live stream that I conducted yesterday for AA, I have a bit of the section in which I talk about substantive procedure. There are 3 things that you have to write for audit procedure. Let me recap with you. When you write audit procedure, right? When you write audit procedure, you must make sure that your audit procedure have, number 1, the verb. it must have the source document, it must have the purpose or the assertion. So ensure that your substantive procedure contains these three things. Then only you can get 1 mark. You can refer to yesterday live. My live yesterday, although it's for AA, but you can just straight away scroll to the audit procedure part. You look at this. You will understand this part better. Okay, the same technique is being used in the AAA exam. Okay, so due to time, I can't really go through about these ethical issues, but let me just tell you, in case if you get ethics, you can use this way to write. Okay, I'll just quickly tell you. Unfortunately, I cannot demonstrate everything to you, but it's like this. Ethical threats, first step, you copy from the case. You copy from the case, and then you have to state the threats. This represents self-interest. This represents self-review. This represents intimidation threats. But that's not enough. You have to explain how it arises. The auditor is providing the accounting service to the audit client. Okay, the auditor is providing accounting service to the audit client. This can result in a self-review threat. This is because the auditor may be involved in auditing their own work and they may have lower professional skepticism. That is, explain how it arises. If there is any code of ethics rule, you bring in the code of ethics. And finally, the conclusion or the safeguard. In order to safeguard against this threat, a separate team must be used. An independent partner must be involved in reviewing the work done of the accounting, whatever. However, because this is a listed company, it is advisable for the auditor to reject this service and don't provide the accounting service. That is the conclusion. So you see, I just give you an idea. There is a technical article on the exam. There is a technical article on the exam technique of this. You read through that, you will understand it better. But generally, to ensure that you can get enough marks, you follow this structure. All right, you follow this structure. Okay, and for audit procedure, remember, you must make sure that each of your procedure has these three. Yeah, you may want to screenshot this screen because this will be very important for you. If you want to write a good answer, you do it like this. All right, so I'll give you a countdown of 5. 5, 4, 3, 2, 1. Okay, we are done. So let us look at question 3 now. Okay, I now it's 9:30. I'm going to extend this maybe by another 20 minutes. Okay, yeah. Because let me tell you, the time is very short. So but I want to give you more tips which can help you. So let us go to question 3 straight away. You have not viewed everything. Okay, question 3. Okay, question 3. I can't go through everything, but I will give you some very crucial thought process that you must have when you do this kind of question. This question involve audit reporting, completion or whatever. Let's see the case. It is 1st of July. It is 1st of July 20x5. Okay, again, you see every date in AAA is 1st of July. You are an audit manager in Saw & Co. You are currently working on 2 clients. Arjan Co and Barnaby Co are both manufacturing company, financial year end of March. So if you look at this one, it's different from the question just now. The question just now is, the year end is after today's date. But today, 1st of July, the year end is March, which means they have already done the audit. You are already almost signing off the audit report already. Both audit are in the completion phase and you are in the process of reviewing the audit file. So be careful. You are now the manager, maybe. Yeah, you are now the manager. Your audit junior, your audit senior already do the audit work for you. They give you the file, you look through the file. You look through the file. And when you look through the file, you may realize some problem you need to highlight. So these are the exhibit. Argent call is a selected result of subsequent event, okay, and final analytical procedure, which has been performed by the audit team. And then Barnaby call is a copy of schedule of uncorrected misstatement, which has been recorded during the audit. So we use the whatever information here. Requirement A. Now look at this. This requirement is quite new. Okay, it's quite new. You may not have seen this in the previous past year, but it's okay. You can still answer this question. You look at it. Evaluate the result of subsequent event. Evaluate subsequent event. Okay, the result. So there are some subsequent event. What is a subsequent event? Subsequent events are event that happens after the year end. After the year end. And there are two duties for an auditor on this. They have active duty and they have passive duty. Even during active duty, there will be the time before the auditor sign the audit report. So when there is a subsequent event, auditor need to evaluate it, see whether is it adjusting event, is it non-adjusting event, do we need to adjust the financial statement, do we need to disclose anything? That is the responsibility of the auditor here. And there is also this final analytical procedure. Final analytical procedure, and you have to comment on whether there are any inconsistency in relation to the audit evidence that is gathered. And then finally, recommend the further action to be taken. If you see this word, ladies and gentlemen, recommend further action to be taken, including suitable audit procedure, which means that there must be some issue. There must be some issue in Exhibit 1. When we read Exhibit 1 later, we want to find out what are the issues. Okay, what are the issues that can affect the completion of the audit. Now, if you look at this, okay, okay, here. All right, you see, this is a table that you may not have seen before. So some of you may get panic when you see this, and you may say, I don't know how to do this. How? Okay, it's okay. Don't worry. You have to believe that. You have to believe that even though you have not seen this kind of question, you can still apply some of the knowledge that you have in the exam. ACCA exam is not just about technical knowledge. It is also about your state of mind. Are you calm during the exam? Or are you nervous? If you are nervous, you keep on telling yourself, dialogue. I don't know how to do this. This one I never see before. In my class, my teacher never teach. I think I cannot answer. If you just think like that, of course you can't answer, but you have to believe. You have to change your belief. When in the exam, if you find out that you are in this state, it is easy, especially in this paper, it is easy for you to fall into the trap of you keep on believe that you cannot write. But ladies and gentlemen, it's not true. You can write something, and I'm going to prove it to you. Even you don't see this question before, there are some easy answer that you can find out. So if you have this belief in your mind, you can see something. So what happened is, you look at this. I need to make this larger. Newspaper report. This is a subsequent event. Newspaper report in June revealed that Chemicor, a significant customer of Argent Corp, entered liquidation. So you should, at this point, start to think already. If a significant customer, okay, if a significant customer of your audit client has entered into liquidation, and the creditors here cannot receive more than 20% of the amount outstanding, this should give you an idea now. Is this adjusting event or non-adjusting event? Now, if you know the accounting standard, you will know if the customer goes bankrupt, they should be facing financial problem. And financial problem don't happen suddenly one. Financial problem will happen gradually until there's no choice the company go bankrupt. So it is very likely that the financial problem happens during the year. And that is why this should be an adjusting event. So you should already know to answer the question, if the result of the subsequent event, you know what to comment already. It is an adjusting event. All right, it is an adjusting event. The amount outstanding from chemical as this one was 0.8 million. They give you a figure. What can you do? They also give you revenue. They give you profit before tax. You can calculate materiality. Materiality here also 1 mark. So you don't tell me you don't know everything. You must be able to write something. Calculate materiality. Okay, it says here, none of the amount outstanding has been received to date. You see here, it says here, they don't receive any amount. They don't receive any amount. So no further work has been performed as a result of this procedure. Now, you can't do that. Of course, you have to still do something. You have to still do something. So as such, for this point, later on, the further action to be taken, maybe you can say, oh, you need to review the letter, from the liquidator. You need to inspect the letter from the liquidator, confirm that they're going to receive the 20% of amount outstanding. You need to discuss with the management to make sure that they have write off the bad debts. Then you have to review their work to make sure that they have written off the bad debts, things like that. So these are the work done that we should do for a trade receivable, which goes bankrupt. Now, there are some other final analytical procedures result which is done here. And ladies and gentlemen, I want you to read this very carefully. An extract of the final analytical procedures prepared by the audit assistant. Prepared by the audit assistant. Now, there's a question. Provision bad debts only can. You see, because right is if it is very confirmed that you can only receive 20%, right? Then the 80% has to be written off lah. Is in exam, right? We don't say provision for bad debts. Okay, we don't say provision for the bad debts, but we will use the term like allowance for receivable or bad debts written off. In this case, because of they already entered liquidation, I feel that it should be bad debts lah. I feel that it should be bad debts because allowance for receivable, or if you like it, some people call it provision for bad debts. So provision for doubtful debt. But in this case, I feel that it should be bad debts because if it is confirmed that you can only receive 20%, the remaining 80% no hope already. If that is the case, we need to write off lah as bad debts. All right, we need to write off as bad debts. So here, prepared by audit assistant. Why is this important? Because student, when they sit for exam, the examiner say, sometimes they don't look at this, and they thought that the ratio here, some of the ratio here, are calculated by management. But that's not good. Okay, yeah, this is a very good question. Materiality calculate using 0.8 million or 80% of 0.8. Queenie, if I were you, I calculate two materiality. Okay, so I'm going to say this receivable is 0.8 million. So the receivable itself is material. So we have to perform something. And since they will only receive not more than 20%, so the 80% is how much? This one represents how many percent of profit? So it is, if not adjusted, it can be a material misstatement. So now I hope I answer your question. If I were you, I will first start off with the 0.8 million to calculate the materiality, just general one. Then, as I explain further, I will say the adjustment is how many percent of profit. If we don't adjust it, it can be a material misstatement. So explain both better. Okay, explain both. All right. So yeah, coming back to this one. Is that some student they go and say, oh, this inventory holding period, you see, 94 days. It drops to 15 days. Then they start to say, there is a risk that the management calculated this ratio wrongly. So the auditor, they have to double check this calculation and make sure that the client calculated this properly. But this is prepared by your own audit assistant, This is prepared by the auditor. It's not prepared by the client. So if your answer go and say, we have to check the client calculation, too bad, you don't get the marks already. It's like your whole answer is already go in the wrong direction. So you must read the question carefully. You must read the question carefully. What is the purpose of this final analytical procedure? Okay, let me do a quick recap with all of you. final analytical procedure is is mandatory to be performed by the auditor before they sign off audit report. And why do they need to do this? They want to make sure that their final analytical procedure, the result, is consistent with their expectation, and it is also consistent with the result of their audit. If they find out that the final result is not the same as per what they expect, they need to do more work to find out why. So we look at some example here. You see, for example, I'm going to use this. This one is a very good example here. The receivables collection period, as per the auditor calculate, 49 days. It increased to 53 days. Yes. But there is no changes in the credit period, so the collection period is expected to remain in line, but it has increased. But why is it increased? Because of slow payment of invoice by this major customer, chemical. Now this is okay, this is consistent, this is consistent, because we know that subsequent event here, this chemical is going to go bankrupt. So the increase here is consistent. The reason is acceptable. So the financial controller is confident that payment will be made. But as you know, as you can see from there, they already go bankrupt. Now, these are the work done that the auditor do. Outstanding invoice agreed to trade receivable ledger. They agree the invoice to the ledger. And they also do confirmation of the balance owed. Now, ladies and gentlemen, I want to ask you, the procedure that the auditor do here, do you think it helps the auditor to determine whether is there any bad debts? You type yes if you think that this procedure is effective to find out whether there is any bad debts. You type no if you find that this procedure is not good enough. It doesn't really answer the question of whether there is any bad debts or not. So what do you think? Type yes if you think that this procedure is good enough. Type no if you think that it's not good enough. I can tell you, ladies and gentlemen, if you agree, the invoice to the ledger, you are just confirming the invoice total. If you do confirmation, you are just checking with the customer, hey, you owe me this amount. Yeah. But you never ask them, can you pay? So a very important concept here is, if you know audit, this has been a recurring issue that the examiner always examine, is that confirmation, checking invoice does not address bad debts issue. It does not address the valuation issue. How do you know whether you need bad debts? You have to maybe talk to the liquidator. Maybe you have to look at the correspondence between the company and the customer to find out if there's any issue with the payment or not. You may need to look at receivables aging report. You may need to look at post year end. After the year end, do you collect any money? So that's why, ladies and gentlemen, if you look at this, right, you know the work done that they do is not enough. And you can suggest them to do more works. But you don't write like this. You don't go and say, the auditor need to check more invoice, increase the sample size. It doesn't help. Some students say, the auditor should send more customer confirmation. No, it doesn't help. The issue is, this work done is not relevant. It's not relevant. Okay? And you look at this. You know that there is an increase in receivables collection period. But how come when we look at the allowance for irrecoverable receivable, it drops? It doesn't make sense, right? It doesn't make sense. If the receivable collection period increase, I will expect that the risk is higher. It should increase. At the very minimum, you maintain. Even though you maintain, I'm going to ask you why you maintain, right? But in this case, it drops. So you can see that receivables collection period increase, but the allowance, right, drop. Inconsistent trend. This is an inconsistent trend. Expectation is allowance is expected to be in line with prior year. And the financial controller reviewed all trade receivable as at year end and concluded that fewer default were expected than in prior year, hence the reduction in allowance. Common. Financial controller say this only. This is management representation. Management tells you this, you cannot trust the management. Auditor need to do more work. Huh? So what the auditor say? The fall in allowance is below 5% and immaterial. No further work was performed. Now, ladies and gentlemen, let me ask you something. If you have immaterial mistake, can you say you don't do anything? Type yes if you think that this is acceptable. Type no if you think that it is not acceptable. If the error is immaterial, can the auditor just say, you know what, immaterial, forget about it. We don't care, we don't see, bye-bye. Can you do that? Type yes if you think that the auditor can do this. Type no if you think that auditor cannot do that. Can the auditor just say, immaterial, bye-bye? Can they do that? Okay, the answer is no. Auditor cannot do that. You know what the auditor should do? First, although immaterial, you should encourage the management. Adjust lah, adjust. You should encourage them to adjust. If they don't want to adjust, you ask them why they don't adjust. And you need to keep a record, you need to keep a record of all these immaterial mistake in this thing called schedule of uncorrected misstatement. You need to keep track there. And you need to see the aggregate. Is the aggregate material? As the saying goes, sedikit-dikit lama-lama jadi apa? Jadi bukit kan? Atau jadi diamond, I don't know. But the thing is, small mistake when you accumulate, it can become big. So if you tell me no further work was performed, I'll be very concerned. You cannot say no further work. There's only one scenario in which the auditor can say no further work. And that scenario is if the mistake is what we call clearly trivial. Clearly trivial. Trivial. If it is clearly trivial, means extremely small, and then you ignore, okay. But this one is only below the materiality level. You cannot ignore. So you have to comment something like this. You cannot ignore. You still have to do something about it. Okay. So that is something which I want to tell you. And yeah. Okay. So the rest I don't want to go through now because I want to tell you the next thing. Okay. Because it's almost 10 already. I want to conclude soon. Let me just quickly look at this exhibit 2 because there's something that I want to tell you, very important that you must know. Now, requirement B, I want you to look at this carefully. You read this carefully. Recommend and explain the matters which should be discussed with the management in relation to the uncorrected misstatement, including an assessment of the individual impact on the auditor's opinion if the management don't make any changes. When the question asks you something like this, right? Where they ask you about this uncorrected misstatement, so they will give you something like this. A schedule of uncorrected misstatement. When the auditor come to this conclusion, right? It means what, It means this. You still remember this one? The one that we discussed, If you realize that there is a misstatement, you need to ask the management. You sure you don't want to you sure you don't want to adjust? No, why? Then you put it in this schedule, So which means you already audited the issue. You already audited the issue and you already concluded it is an error which is not corrected. The question asked for recommendation and to explain the matters that should be discussed with the management. And then they give you some information here. Remember this, if you get this question, you are not supposed to say this entry is wrong. You know why? You have to first understand, if you get schedule of uncorrected misstatement, this schedule is prepared by the auditor. This is not prepared by the client. This is prepared by the auditor. The auditor, they themselves say you need to debit SOPL 5, you need to credit SOPL 5. Auditor, they themselves say. So if your answer start to say, this entry is wrong, it should be something else, sorry, you don't get the marks already. Okay, so ladies and gentlemen, can you understand what I'm telling you or not? If you get this question, remember, if you get schedule of uncorrected misstatement, you do not go and comment and say that this is wrong. It is correct. The proposed adjustment is correct. You just need to explain to the management. If this is clear to you, you type 666. Okay, is this clear to you, ladies and gentlemen? Is this clear to you? If clear, you type 666. I know some of you may want to ask me, but how come sometimes past year, I need to comment on it is wrong? Be careful. What did the question ask? The question, if they ask like this, if they ask, for example, comment on matters to be considered, okay, and explain further audit evidence, okay, or further action, further action. Yeah, further action, or what is the audit evidence expected on the file? If you get this kind of question, yes, you can say the accounting might be wrong. Because you see, in this question, right, if you get this question, comments on the matters to be considered and explain further audit evidence or whatever, this one is because they are still issue. They are still issue. This one you can comment about error. But look at this question carefully. This one is the auditor already summarized about uncorrected misstatement. They already know that this is wrong. So your task is just to explain why is it wrong. To answer this question, okay, to answer this question, you need to write. Okay, I give you some ideas. If you get the question of schedule of uncorrected misstatement, okay, if you get the question on schedule of uncorrected misstatement, you have to talk about the reason to correct the error. So which means you may want to talk about the accounting treatment. Why is it wrong? Okay. Why is the client treatment wrong? And why is your adjustment correct? Okay, be careful. Why client wrong? Why you are correct? Then, if there is materiality, please calculate materiality. What is the correct accounting treatment? Please tell them. What is the impact if it is not corrected? The question here says, assessment on the individual impact of auditor opinion, which means individually, is it material? Individually, does it result in material misstatement? Like for example, in this case, we will see that government grant adjustment is individually material. If you don't adjust this one alone can cause qualified opinion. Okay, can cause qualified opinion. But the machine cell, the overstatement is 1, which is likely to be immaterial. Okay, if you calculate, you will see that it is immaterial. So immaterial in isolation, it does not affect the audit opinion. That is what you should write. Okay, so something like this. Just explain, your role is just to explain. There's no need for you to say the double entry is wrong. It is correct. The proposed double entry is correct. You just explain the error, materiality, what is the correct accounting treatment, the impact if it is not corrected. Now, finally, I just want to tell you, something. When you write answer on audit opinion, don't write this. There's no such word. There's no such word called modified except for opinion. If the examiner see this, they will just say, you know what, 0 marks for this point, for this sentence. 0 marks for this point, because this is not the right terms. It's not the right term. You do not say modified except for opinion. What is the right word? The right word is qualified except for. Okay, qualified except for. One more thing to tell you, ladies and gentlemen, this is a common error. Not common error. I mean, a lot of students, if they don't get it, they can get this wrong. When we have material misstatement, the audit opinion is normally qualified opinion. Normally is qualified opinion. Not adverse. Not adverse. Some students, they just say, this is a material misstatement, so adverse. So no. It should not be adverse. Unless adverse is used when the effect is pervasive. Okay, only if the effect is pervasive, then it's adverse. Now, what about if there is an immaterial misstatement? If there is an immaterial misstatement, the opinion is unmodified. Please take note. If after you do everything, you realize that the total mistake is immaterial, that's okay. Unmodified. I mean, after you do the things that I tell you to do, ask the management why you don't want to adjust. You sure you don't want to adjust? Then you'll see the aggregate, and once you are happy, everything is immaterial. Then you go for unmodified, because sometimes students will say, if the misstatement is immaterial, qualify no. But please remember, this is the right answer. Material misstatement generally result in qualified opinion. Immaterial misstatement result in unmodified opinion. Okay, yeah, I think I told you enough already. I think I told you enough. But in these 2 hours, I don't think I want to tell you more. But hopefully, ladies and gentlemen, the main focus of this live stream that I do today is I just want to show you things like the common error. I hope that now that you know about some common error, you know about things like what are the things to do, what are things that you shouldn't do, like how do you write audit risks, how do you write audit risks, how do you write audit procedure, how do you write ethics, and you know that schedule or uncorrected misstatement is you do not comment on the double entry is wrong, things like that. Yeah, okay. How about, okay, there's a very good question here. How about unqualified opinion? All right. Hui Ling, let me just tell you something. In exam, right, I always recommend students to use this word. Because if you look at past year paper, they normally say unmodified. They normally say unmodified. We don't really say unqualified, because if you look at the standard actually just says the standard opinion is called unmodified. Okay, if there is something, like if there is a material misstatement or the auditor is unable to obtain sufficient and appropriate evidence. By the way, this is the short form. Auditor unable to obtain sufficient appropriate evidence. This one, the opinion become modified opinion. And underneath modified opinion, you have three. You have a qualified, you have adverse, you have disclaimer of opinion, right? You have disclaimer of opinion. So that is why these are the standard wording that they use. So to answer your question, I highly recommend you use this word and you don't use unqualified. Okay, that is my recommendation. You don't use the word unqualified, use the word unmodified. Okay, good question. Is there any question that any one of you want to ask after listening to what I'm saying? You can ask, you can ask. Right, any other question that you want to ask? If no, right, then I'm going to end the live stream soon, and I hope that you learned something from today, right? Okay, so final piece of advice to all of you is, remember your mental state is very important. If you realize that you are in a panic mode in the exam, take deep breath and come back to your senses, as fast as possible. You can panic, but you don't panic for half an hour. You don't have the time. Just write something. And it is quite impossible that that you don't know anything to write one. So just take a deep breath, just start writing. Just write anything that you feel is logic. The more you write, the better chance you are at passing. Okay, don't leave your answer empty. Yeah. Okay, what subsequent event is activity, right? Yes, Siu Fang, because the auditor have not signed the report. If you look at this one, right? Here. Let me close all this. because they are still currently in the process of reviewing the audit file. So now it's still the active duty. They are not asking you about passive duty. Yeah. Andrea, there is a request. Can I explain goods in transit? Okay, I roughly explain to you. Goods in transit. Roughly explain to you. In what context? Because these goods in transit can appear in a lot of scenario. Like it can appear in group account, it can appear in bank reconciliation. Let me explain quickly. Maybe let's just say on bank reconciliation. Okay, maybe on bank reconciliation. What happened is maybe this is your client and this is your customer. So what happened is you already you already dispatch the goods. You dispatch the goods, and the goods is actually in transit. The goods is in transit. So what happened is okay, not bank reconciliation. Sorry, it shouldn't be bank reconciliation. But let me talk about trade receivable confirmation. Okay, trade receivable confirmation. You see, what happened is when you confirm a trade receivable, maybe the trade receivable balance that you confirm is lower and your client balance is higher, maybe. Okay, maybe the client balance is higher. So if the client balance is higher, but the trade receivable when they confirm is lower, maybe it's because of this, Client, they dispatch the goods and the goods is in transit. It is in transit. So the customer have not received it. They have not received it. If they have not received it, right? If they have not received it, they are not going to recognize it. So that's why when they confirm with you, they have a lower balance because they say, I haven't received it. There's no balance owing to you. But the client here have already recognized the trade receivable and the sales. So that is why the client balance is higher than the confirmation. Now, in this case, is this acceptable? The answer is yes, it is acceptable, provided you can get a proof. You need a proof for this one. You need a proof that the GDN, the goods delivery note, is before the year end. You need a proof that the goods are delivered before the year end. So that is one example of goods in transit in trade receivables confirmation. Another goods in transit, right? Another goods in transit is, let's just say in group account. Okay? In group account, maybe what happened is the parent have a goods in transit. Okay, they send the goods to the subsidy. So the goods is in transit. So what happened is the parent here, the inventory is already gone. The inventory has already reduced. They already recognize trade receivable. Okay, they already recognize trade receivable, for example. But the subsidiary here, there's no inventory. There's no inventory. In group account, when we do goods in transit, what we do is we are going to assume the goods are received. Okay, we are going to assume that the goods are received. So we need to debit inventory of the subsidy and we need to credit the trade payable. We assume that it has been received. Then these two parts, these are intercompany balance. These are intercompany balance. You have to, let me scroll up, the comment is blocking. So you see, when you assume that the goods are received, the inventory, you debit inventory, then you credit trade payable. So what happens is these two you have to eliminate. Okay, these two you have to eliminate. Okay, because those are intercompany balance. Okay, those are intercompany balance. Apart from this adjustment, in this inventory here, you may have unrealized profit, which you need to remove. Okay, you may have unrealized profit, which you need to remove. And then you also need to remove like the unrealized profit, not just in the balance sheet, you also need to remove it in the SOPL, in the profit or loss. All right, I hope I answer your part on goods in transit, because to answer audit question, you need to read the case and we have to see what's going on. We have to see what's going on with the case. Then only I know what to explain to you. But I give you an idea. These are the two issue, that can cause goods in transit. All right, next question. Can I know what is write down for obsolete inventory as percentage of inventory held? The percentage increase because more inventory has been sold, right? Oh, I think you are referring to this one, right? Okay. You are referring to this one. Now, okay, actually this one, yeah, because just now I didn't explain due to time, but I roughly explained to you, yeah, Xiu Fang. This so-called write down for obsolete inventory as a percentage of inventory held is an adjustment for lower of cost and net realizable value. So you see, the idea is like this. The inventory in the SOFP, in their inventory account, it can be broken down into two. Inventory at cost, then there will less this thing called allowance allowance for write down, whatever that they call it. So maybe 100, then they less 20, then they have 80 lah. So in this case, right, you see, in this case, the percentage is 20%. The percentage is 20%. So the percentage here is the percentage of this write down over the cost. Okay, over the cost. In this case, the percentage increase. It doesn't make sense, just to let you know. It doesn't make sense. You know why? The company, if you read that, the inventory has fallen by 84%. The management used just-in-time system. As a result, inventory holding days has dropped. If the inventory holding days drop, there should be lesser obsolete inventory. Yes, you are right. It's not consistent. It's not consistent. So this trend increase, something is wrong. It cannot be increasing. It cannot be increasing. And the reason that they say is they do not currently have sufficient experience with the new system. So that's why they are being cautious. You cannot do that. You cannot be overly cautious. You cannot be overly prudent. You cannot simply recognize an expense or something that didn't happen. The conclusion by the auditor is the same. They say less than 5%, immaterial, no further work performed. That's not allowed. You need to find out how they find this 10%. How do they get this 10%? Understand more of how they get this 10%. If you find out it doesn't make sense, ask them to adjust it, ask them to reduce the percentage, you review the adjustment. Okay, yes. So that is why you see, we don't go and think why increase. We just need to say it doesn't make sense. The result here doesn't make sense, so inconsistent. Because of inconsistent, we need to ask the client to do something or the auditor have to do something. All right, hopefully I answered your question. All right, hopefully I answered your question. Okay, any other question before I end the class? All these are very good questions. That's why I always enjoy it, when students ask me questions. When they ask me questions, it means that you are thinking. And when you are thinking, right, you can learn a lot more. So yeah, I welcome question. See if there's any more question. If not, then I'm just going to end now. Okay, no more question, right? I don't think there's no more question. Okay, so anyway, I want to wish you all the best. Okay, I want to wish all of you all the best, and hopefully, right, you get the question that come out and you know how to write lah. So what can you do during these few days? Okay, this is what I will suggest to you. First, you try to at least review a few past year paper, if possible lah. If possible, you study what you have studied before. Don't study a new past year paper that you have not studied before. The question that you did, if you attend class with your teacher, like my student, if they attend class with me, we did a lot of questions in class. My revision class, I did a lot of past year. Look at those past year that I've gone through. Just look at the answer, see if you can understand or not. Try to remember some of the key points so that you know how to write. Just revise on something that you have learned before. Then spend some time to go through SBR notes, refresh your memory. Recent trend, I tell you, is that I don't know why, but the examiner like this standard, IS 19, employees benefit pension plan, defined benefit plan. This has come out for some student where the question talks about some defined benefit plan in the audit risk question, and they ask you audit procedure on it. And they tell you they hire an actuaries to value this defined benefit plan. So some students, they say, oh my God, I never do this before, but it's okay. You know why? If the question writes something about actuaries, it is an expert You can assess their independence, assess their competency, you can review their report, look at their assumption. It is similar to valuer. It is similar to valuer. If you know the audit procedure for valuer, expert the report by valuer, you will know how to write the procedure for this. So don't worry if you get something like this, you should still be able to answer it. But I will tell you, since the examiners start to examine things like that, maybe they will ask you something about share-based payment. You never know, you never know, because AAA is known to be unpredictable. I cannot predict, only the examiner can. So revise your knowledge on SBR. No need too much, but at least read through the notes, have a brief idea before you go to exam. That would do, okay? That will do. And maybe if you have some auditing notes that you do, you may want to just refresh some of the key points for audit. So like audit theory lah. That's enough already. So have a good rest, and hopefully you can do good. You can write the answer that you want and you pass this paper. All right. Once you pass this paper, I'm sure that some of you here, this is your last paper. I hope that you can become ACCA affiliate after this. Okay. So thank you very much, ladies and gentlemen. I hope that this has been a fruitful live session, and I hope that you learn something and try to apply this in exam. It will make a difference. It will definitely make a difference. All right. Thank you very much, ladies and gentlemen. Have a good rest. All right. Have a good rest. Now, all the best. Let me just put this up. All right. Have a good rest. Thank you very much for watching. Okay. And take care. Bye bye, everyone.